Hello and welcome to this week's Elite webinar. I'm Riz, and it's been a pretty bearish week this week after a sustained rally and, of course, a little bit of a consolidation leading up to the election. And, of course, we had a massive gap up. But this past week, pretty bearish pretty much every single day. Um, of course, from a technical analysis standpoint, we're getting close to that 5850 area support that I had outlined a week or so back. And we did get very close. Take a look at this. Take a look at this candle here on Friday. You can see the wick here getting pretty much smack dab on 5850 and then eventually closing here at 5870, right? Quite a bearish day, of course, followed by, sorry, preceding Thursday's bearish day as well. So we will see how that support level holds up going into this coming week. We also have what's it called? There's a little bit of earnings some big companies. I would say, something we'll touch on, of course, but overall, the market kind of retracing here. And of course, that's to be expected. Take a look at the RSI, right? Once again, was very overbought, and I've said it can remain overbought, uh, which it did, just on that 70 line, very much so. And now after Thursday and Friday's dip, kind of coming back down here. So it remains to be seen if that 5850 support will hold. And then if that breaks, keep an eye on that 50-day moving average here. As you can see, I have that yellow line. That is going to be key to see if that 5772 is kind of where it's at. If that holds. If not, then you can expect 5,700. 5,700 seems to be a key area. We've had plenty of touch points here, 5,700 back in October, and of course at the start of November as well, leading up to the election. So that's going to be a key area to keep an eye on. I doubt we'll see, of course, 5,600, 5,650, sorry, 5,575, 5,600. I don't think we'll see that this coming week. Okay, so moving on to the year-to-date sectors. So take a look at obviously the SPX, the S&P 500 ETF here is slumping a little bit, of course, alongside everything else, even communications. But the only thing that's kind of held up here, if you take a look, is the financials, right? Financials has done well, even during this kind of market small little turnaround, right? Turnover. This is not even a pullback. We're pretty much only 2%, 2.5% from the highs, all-time highs, right? So still above the pre-election price that we were at. And of course, you can see we have healthcare getting absolutely demolished. Take a look at this coming closer and closer to the center line here, the 0 point, and that is not looking good. Predominantly, the market reacting to the new incoming Trump administration, essentially, or Donald Trump essentially putting up RFK as the kind of the flag bearer for the health and sort of safety, health, food type of stuff, with the whole make America healthy again type of scenario going on. And obviously with a bit of a uncertainty alongside that, the pharmaceutical sector has kind of pulled back. Perhaps there's some disruption, some changing of the guard, potentially there. So we've had the pullback there in that. We've had everything else kind of just take a little bit of a dip, but nothing substantial. Nothing substantial. We have real estate here is still consolidating here in this area, still up. Obviously, we have the XLP ETFs sector, consumer staples, energy kind of coming up a little bit once again, holding there after the start of November, which was pretty bullish so far. XLK, XLY, XLU, all sort of kind of pulling back a little bit. XLU actually slightly up there, but everything else teetering over. Again, nothing critical, nothing major, nothing to be concerned about in that sense. The only thing that really sticks out to me is the healthcare side of things, as I mentioned. Moving on to crude. Take a look at oil. Oil consolidating here. Once back again. to the 68 area, this kind of key support that I held. Kind of extraordinary that it's back again, languishing here as we head into the winter months. There still seems to be some concerns around demand. If there's economic slowdown, there seems to be a demand, I would say concerns for developing nations or even something like China, where there might be a potential slowdown in economic growth. And as a result, OPEC has continued to slash their projections for 2025 from a demand standpoint and a production standpoint. They're still kind of keeping things steady, which is controlled and lower than the few years ago. Now, with that said, take a look at gold. That is quite the sell-off here. As you can see, it's dropped just from the highs alone, which is, let's just say the start of November to now. So in 2 weeks, gold has pulled back nearly 8.5%, which is quite extraordinary and quite significant. In fact, of course, this rally that we've had pretty much all of 2024 has been tremendous. But this pullback, not surprising, coming back down here with after very overbought levels, very overextended levels. So not surprising here coming back. The reason being that potentially we've got a little bit of a higher rate environment. We've got maybe, a couple uncertainties as the incoming administration is set to take office in the start of the new year on January 20th is the official inauguration date, if I'm not mistaken. So bit of a healthy pullback here. Not 10%, not an official correction from the highs yet, but getting there, right? So none of this should come as a surprise. It remains to be seen if gold can kind of maybe consolidate, find a floor. Not so much right now, but I would wager maybe 25 area. Let's just put a line here just in case for accountability here at some point to see if that acts as support. So 25 area. Okay, let's actually, whoops, 25. Okay, let's mark that as support. Perfect. Okay, so let's see if that holds up coming into the following week. Next, let's move on to bond yields. You can see bond yields continuing to trend up as Powell recently spoke, I believe on Thursday or maybe it was Friday, that he said that the economy continues to look strong, which it does. It continues to chug along, which it is, and that perhaps there may not be need to do another rate cut, and he's talking about December's Fed meeting. So the market kind of took that, and as you can see, bond yields kind of continued to go up, and of course that could also be signified was one of the reasons why the SPX, the the market dropped Thursday and Friday as well. Okay, moving into the U.S. dollar index, continuing to look very strong, hitting the October highs, as you can see here. Last time before October, that the last time we had the US dollar index at this level was, October 2023 highs. Okay, not 2024, 2023 highs, the October 2023 highs. So over a year ago, it's at the highs of 1 year. Okay, before that, the last time it was at this level was 2022 in November. So the US dollar index has really surged, made a big comeback here, and of course, looking very strong. And I mentioned this in the last webinar as well, that the reason being that the market is pricing in maybe less aggressive cuts, maybe a higher rate environment for longer, of course, alongside the more tariff insulated populist sort of, I would say, agenda of the coming President Donald Trump. The market is kind of understanding that the U.S. dollar, a strong U.S. dollar, is in play. So you can see that expected and represented there. Flipping back here, so again, like I said, the market did pull back. We did have, like I said, Powell speaking Thursday or Friday. and you can see that drop continuing there. Let's flip to the earnings calendar here, and then I will say that for those of you watching this live, feel free to type in your questions as well if you have, as well as I move into the what is that? Okay, let's see. Why is it kind of all right, flipping back to earnings, we got it working here. Apologies for that. So we have here the earnings for this coming week. You could see not a whole lot, but there are a couple big names, right? Specifically Walmart, of course, everyone's favorite retail store after Costco, of course, I believe. We have Lowe's as well. Uh, Last week we had Home Depot, so this is something to be keeping an eye on. We have some Chinese companies as well. Nothing that kind of interests me. We have Target as well, another retailer, and TJX, right? Of TJ Maxx and all that stuff. Then we have, of course, the big daddy of them all, the biggest name, I would say, the most popular and most extravagant name, Nvidia reporting Wednesday after close. So this is going to be a big one for all of semiconductors and all of tech, of course. And I would say going to have an impact pretty much broadly on the entire market as well, how it does. So this will be very key, very interesting to see. We have Snowflake and Palo Alto Networks, also not any slouches there. So to keep an eye on that if you care about growth tech company there is as well. Nothing really exciting on Thursday unless you care about John Deere, which will be give us an idea on industrials and of course some of these Chinese companies reporting as well. We have another retail clothing company Gap. We have of course Intuit, which is I believe, tax type of stuff there. So there that's after close on Thursday. And that's about it, right? For earnings. Again, like I said, couple heavyweights, a few heavyweights, and then that's it, with the biggest one being Nvidia. For the economic events this week, very, very muted, very, very non-eventful economic week from that standpoint. We only have about I believe housing building permits, so not too concerned about that. So let's flip back here to the chart. We got a question here from Dylan. Looking to take a starter position on Microsoft between 400 and 405. Could I get your thoughts? So MSFT, of course, fantastic company, great company here. 400 and 405. That is still definitely a bit of a wait, of course. So that's actually a good entry point potentially. Now that we know that, of course, earnings are done, there is some antitrust slash breakup type of concerns there from a regulator standpoint, kind of what Google is also kind of facing. So there remains to be that. Just be cautious of that. But as of right now, it's not at that point. So at 405, I think 400 ideally is definitely a better entry in my opinion. 405, 400, definitely 400 being the more solid one, just below the 200-day moving average too. And if you do take that, although Microsoft is a great company, if we see a break below that 400 level, there's a reason for that happening. So maybe the market's pulling back, maybe there's some other catalyst or news. And at that point, I would suggest maybe having a stop. Usually, I would not recommend having a stop on these solid companies or hard stop. You can have a stop loss in mind, but having a hard stop loss order, not ideal for these solid companies. So, in my opinion, that's what I would have recommended. But with the way things are right now, with the market curling over from all-time highs, and of course some of the catalysts as I mentioned, you might want to consider having a hard stop. So if you enter at 400, for example, if it gets there, you enter long there, maybe consider a stop at around 390, 395, and then if you enter at 400, target 410, in my opinion there. Okay, so that's that. J&J is another one, right? Currently watching J&J again. This is a fantastic company too. Pulled back. I actually missed this Friday move. I didn't expect this a strong move. Open lower, gap down, open lower on Friday, and then it just closed very strongly positive. 1.40%. So you can see that was a pretty volatile day on Friday, very positive in that sense. So this is looking definitely interesting. You can see here that we had the support area before, probably from a few weeks ago, and it's broke strongly below that, broke strongly below the 200-day moving average as well. And this is looking really good. So if I can maybe it pulls back a little bit, again, depending on how the market does this week, if it's bullish or bearish, maybe if we can get it at 153, 152, if it does, then I might consider actually taking a long here. This is actually looking really nice. And of course, as JNJ got very oversold here as well. So definitely keeping an eye on this as well. So great find. Let's also look at Procter and Gamble. This has kind of been doing really well, bouncing off the 200-day moving average. And again, I front ran you there, Dylan. You asked about P&G. I got it right up here, right before you did. So this is definitely looking strong. I wouldn't enter this yet. I think this is a bit lofty still. J&J definitely looking like the better entry opportunity in my opinion. So that's something that excites me more compared to P&G. Again, great company, but nonetheless, um, J&J is kind of a better setup there. Okay, I'm not seeing any other questions coming in. So again, a pretty quick session here for a pretty bearish week, easily, right? No doubt about that. Pretty bearish week, but again, very much right back to post-election, right? November 5th, post-election, and man, so it's kind of interesting. We just come back right there. It remains to be seen if this breaks. So keep an eye on that. We'll see how that goes this coming week before making a determination as to where we might go next. We are heading into the holiday season. We got a month and a half left. The last week of December is pretty much a wash with very low volume. We have Thanksgiving as well coming in the US, and Canada actually we actually had our Thanksgiving last month. So that'll be very interesting to see as we get a little bit of holidays, lower volume. It will be quite unique to see how the market does. Maybe, we do get that 57-75 area. Okay, so keep an eye on that. Once again, thank you everyone for joining. Thank you for the questions. And if you're watching this, please like, subscribe, share, make sure it you follow along. Hopefully you find these webinars, especially the recordings, helpful if you're not able to attend live with us in Elite. All right. Once again, thanks a lot. Take care. Have a good rest of the night and a fantastic weekend. Ciao.